Imagine waking up one morning and realizing that a single financial stock, SoFi, could be on the verge of a major breakout despite all the volatility we've seen in the markets. The story of SoFi right now is a mix of pressure from shorts, technical breakdowns, surprising labor data, and some under-the-radar news that could turn into a major catalyst. If you've been following SoFi's journey, you know how quickly sentiment can shift. One day it looks like the market's collapsing, and the next day, optimism creeps back in. Today, I want to walk you through everything that just happened with SoFi, the role shorts are playing, the technical indicators that investors are watching closely, and why the bigger picture might actually be setting up for something much stronger than people think. Now, let's get into the full breakdown. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi ended the day in the green, closing up 0.82% at around 25.45 cents. The session's low sat near 25.45, while the high reached 26.35 cents. Pre-market trading looked fantastic, almost like things were about to explode upward, but just as we've seen repeatedly over the last 3 trading sessions, the moment the regular market opened, chaos hit. It feels like SoFi has been stuck under a layer of suppression compared to other fintechs lagging behind, while other sectors, particularly chip stocks, surged and helped carry the broader market higher. Without the strength in chips, today might have been a painful red day across the board. A big piece of the puzzle today was labor data. Challenger job cuts came in dramatically better than expected, 54,000 versus the 150,000 that analysts had forecast. This unexpected strength shifted the market's view of interest rate policy. Instead of the Federal Reserve being forced into a 50 basis point cut, the odds now favor just a 25 basis point cut at the upcoming October 29th meeting. At first glance, that sounds like good economic news, but as we know, Wall Street sometimes hates good labor data because it reduces the chance of aggressive monetary easing. Over the next several sessions, though, the market is likely to price in this smaller cut, and that alone could become a huge catalyst for fintech names like SoFi. While SoFi's performance lagged behind some peers, there was still positive news. The company officially rolled out updates for its Level 1 platform. This wasn't entirely a surprise, since hints were already floating around on social media, but formalizing it gives credibility and reassures investors that progress is being made. The real question is whether this update can become a reliable source of revenue without major glitches. If it works smoothly, it strengthens SoFi Invest, a segment that has been lagging compared to other divisions of the business. Innovation is critical if SoFi wants to compete with industry giants, and adding more functionality is definitely a step in the right direction. But here's where things get complicated. Technically speaking, SoFi has been weak. Chart watchers point out that breaking below the 29.36 pivot now projects a possible decline toward the $22 range based on Elliott wave theory. Even more shocking, SoFi had just experienced 7 consecutive red days, which may actually be a record low streak for the company. Today's green close finally broke that run, and the hope is that momentum can flip back upward from here. Another interesting observation comes from SoFi insiders, a group that often gets dismissed as overly bullish or even pumpers. Yet lately, they've been piecing together some legitimate signals about upcoming partnerships and potential deals. CEO Anthony Noto has previously said that as many as 10 new revenue streams could be launched in the next couple of years, with some already in motion and others still developing. Most of these would begin to show results by 2026, but anticipation builds every time a rumor surfaces. Even smaller details, like SoFi being tagged in unrelated fintech discussions, could hint at deeper collaborations in the pipeline. Based on Noto's comments, it's very likely that Q4 will bring major announcements, possibly including crypto-related projects. Despite short-term weakness, long-term investors might see this as a buying opportunity. If your horizon stretches into years rather than weeks, dips like these are often the moments when the biggest gains are seeded. It's easy to panic when stocks fail to hit new all-time highs, but history shows that consolidations often precede explosive moves higher. Now let's talk about short sellers. Today, shorts returned 464,000 shares, bringing the short interest to roughly 9.48% of the free float, or about 111.62 million shares. This aligns with expectations that shorts would begin covering positions after recent government shutdown fears fizzled out. Instead of triggering panic, the market shrugged off the threat and dip buyers stepped in. With fears calming down, more short covering could drive momentum upward in the coming sessions. Options data also shows an interesting trend. Roughly $61 million in calls and $14 million in puts traded today, with nearly 48% of options activity being bullish. That's significant. Despite SoFi's recent struggles, a large portion of traders remain optimistic about its short-term movement. Bullish consensus targets are around 26.50 cents to $27, while bears still argue for a pullback below 25.50. Friday's session will be key, as open interest is stacked heavily at strike prices around 26 at 26.50, 27, and 27.50. Any push toward those levels could create walls of resistance or bursts of momentum depending on how the day unfolds. Behind the scenes, large institutional trades tell their own story. Several massive block trades took place, including one worth over $59 million. Dark pool activity also remains heavy, with multiple transactions in the $2.5 million range, eerily similar in size to the previous day's dark pool trades. It strongly suggests that the same large entity might be making these repeated moves. That kind of activity can weigh on a stock in the short term, but also signals that big players are positioning themselves strategically. From a technical perspective, SoFi now sits between support at 25.21 cents and resistance at 26.44, with the next target above that at $27.21. Closing above those levels could ignite stronger momentum. While SoFi remains under its 10-day moving average, which indicates weak momentum, oscillators like the stochastic RSI show oversold conditions. That means just one strong piece of news could spark a meaningful bounce higher. For long-term investors, the takeaway is clear. SoFi has been consolidating, and that's normal. Every major growth stock, including giants like Nvidia, has gone through long stretches of sideways or downward action before breaking out to new highs. If you bought at 30 years, you might feel anxious, but if you believe in SoFi's leadership and in the growth of digital finance in the U.S., this consolidation could be the foundation of future gains. In summary, SoFi is at a fascinating crossroads. The stock has survived a streak of red days. Shorts are beginning to cover, insiders and analysts are hinting at exciting partnerships, and technical indicators suggest oversold conditions. Add in the possibility of supportive monetary policy and upcoming Q4 announcements, and the setup looks far from bleak. The road ahead may not be smooth, but it could be rewarding for those willing to weather the turbulence. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.